All right, everybody, here we are, you and me, and I want you to sit down because you're really going to have your mind blown here. What am I talking about? First of all, let's start off with the correct date. And the date today is Friday, January 7th, 2022. I know what I did yesterday in my post-market wrap-up. I kind of, said 2021. Yeah, my brain sometimes doesn't function too well. But it is this morning, people. Let's talk. So we got a couple of pieces of economic news, and well, how many of you are going to be surprised to find out how bad it is? Actually, it's a historic miss. Apparently, the U.S. economy added only 199,000 jobs, although this is not even true, in December. The projection was we were going to add 422,000, but we added only 199,000. Every week we lose 300,000 people to first-time unemployment claims, but we're adding jobs. That's what they're saying on the propaganda ministry. We're adding jobs, and it's insane too. So despite this literal historic miss where you got hiring, you want to talk about hiring falling off of a cliff? That doesn't even come close to what just happened. It absolutely cratered. What else did you expect? Our economy is in free fall. It's absolutely collapsing. Debts and deficits continue to balloon. It's not going to stop. So, that's just the way it's going to go. No surprise to you if you follow this blog. But again, it's too much. And they're trying to convince you that the unemployment rate fell. Let's see. We add less than half of the jobs that were estimated to have been created, and the unemployment rate falls. How does that work? Again, it's too stupid. Now, the other piece of news that we got is, wages are rising fractionally. People, they are going to tell you to look here and don't look here like they always do. The fact of the matter is, inflation is surging. I cover this every freaking day. The Federal Reserve is deliberately in the business of creating inflation. We are now at 7%, a 7% inflation rate. That's their numbers. And they want you to be all happy because wages grew 0.1%. How does that work? Again, it's all propaganda. It's all deception. Nothing is real anymore. And I've been telling you this for the longest freaking time. Let us move on, people. We got the 10-year yield at 1.75. The dollar is weaker this morning. Stock futures are lower. A little bit lower. Nothing dramatic, but lower here. Okay, the MMRI. Look at the MMRI, link in description of this video. I want you to check this every single day, whenever you want, morning or night, but while we're talking about it, do it right now. Click on the link in the description of this video to the MMRI. You will see, well, at least at the time I'm doing this, it's sitting at about 104. No panic, no reason for us to, go crazy here. But I want you to be aware that risk is rising. Risk is rising in this market. But we also must be aware that the easy money is not going to stop. You can rest assured that everything that the Fed is talking about recently, lately, about raising rates, they're ready. They're actually finally ready to combat inflation. It's a joke. It's not going to happen. And with regard to a balance sheet runoff, there's no way on this earth it's even possible to happen. Again, think about it. Who in their right mind, what entity, what nation is going to buy debt off the Fed's balance sheet that's yielding lower than the current rate? They're guaranteed to lose money. And as a matter of fact, you are still guaranteed to lose money if you were to buy a treasury here in a rising rate environment. You got to be insane. But that's the way it is. The Fed, look, has literally fulfilled their goal to be the lender and buyer of last resort. There is no way, and I mean zero, that they are going to go back on what they've achieved already. They're buying it all. They continue to issue debt around the world, buying assets, funneling dollars to other central banks around the world who are buying assets with dollars. I think that's the biggest secret that people are not being allowed to know. Again, the Fed has two balance sheets, people, the one we're allowed to see and the off-balance sheet stuff. All the stuff they keep hidden. That's where that is. Anyway, what else is going on? Cryptocurrency is under pressure here. No surprise to a single one of you, not one, who follow this blog, because I told you last Sunday as part of my top 5 trends for 22, you were going to see extreme volatility in crypto. Why? All the talk about regulation. I don't think it's going to amount to a damn thing. Because you see, our so-called loving policymakers, they feel very strongly that Bitcoin, cryptocurrencies are a threat to our current financial system, which is run by the Federal Reserve and central banks. You see, they're defending the beast debt-based system. They don't want you in anything else. Our loving, caring, absolutely retarded, excuse my language here, representatives, they represent nothing. They don't represent you. They represent the Federal Reserve. I've been telling you this for years. Okay, now maybe you believe me that they're defending the current system run by the Federal Reserve. They don't run it. Congress doesn't run it. It's run by a private entity, private entities, as a matter of fact. And they have full control. But they're going to defend it, and they're going to make sure that you are in nothing other than Federal Reserve issued notes. You can't transact in anything else because it's a threat to the system. It's a threat to the beast system. You all know that. Gold and silver right now are under some pressure as well. Nothing major. But people, look, what are we seeing here? Excuse me. The game remains the same. Risk on. Risk on. What does that mean? Cash is going to make its way into the stock market. Look, we have seen a pretty profound, in fact, I would say profound rise in the 10-year yield as of late. What does that mean? What does it mean? I know most of you understand that. When you see the 10-year yield rise like that, that means cash is coming out of the debt market. It's obviously not going into precious metals. It's not going into cryptocurrencies. Where else do you think it's going to go? You think it's going to stay in cash? No. Watch the movement of cash. It's waiting for somewhere to go. And in my opinion, it's going to go into the stock market. It's going into crude oil too. Crude oil right now, as I am speaking, is over $80 a barrel. Can I please see your shocked face? No, not a single one of you are shocked here. Crude is going much, much higher. $81 a barrel is a joke. And if you consider all of the products that are made with crude oil, just Google that, or whatever search engine you might use. Just how many products are made with crude oil? Your mind will be absolutely blown. And this is another reason why, again, one of my top trends for 22 is rising food and energy prices. People, come on. Get on the bandwagon here. Let this system work for you, not against you. Like I've been telling you since like time immemorial, you can sit back and do nothing. Or you have a choice to weaponize the system. Weaponize it against those that are trying to hurt us. There are people here who are deliberately going out of their way to hurt you, okay? And that is obviously not me. I've kept all of you on the right side of this for a very, very long time, explaining to you what you need to do, why you are doing it, betting against the debt, becoming your own central bank. Let them play their games with gold, silver, and yes, cryptocurrencies here. Let them play those games. Those are anti-debt units, okay? And you need to be in these things to take the opposite side of the trade. Now, with regard to this market, people, I believe right now, I put this out in my newsletter, link in the description of this video, and I talked about it yesterday. It looks about time for my lions out here to start nibbling at the tech sector. Okay, look at QQQ, ticker QQQ. Please don't go all in on this. I'm telling you, I think you should get it on your radar screen. And the best way to do it, in my view, is to get a little skin in the game. That means to get in here and start buying. Just nibble at it. And let's wait. Because I'm not convinced, really, that the tech sector is done falling under pressure. But again, I'm not in the business of picking tops or bottoms, and neither should you be. We're trading trends, all right? We are speculators. That's what we are. I don't work a 9 to 5 job where I get a steady paycheck. I have to speculate in this market, and my calls have been pretty damn accurate. Are they right all the time? No. Am I right 90% of the times? I would have to say yes. And if you've been with me for any length of time, you would have to agree. Greg's calls are right the vast majority of the time. So anyway, that's what we're going to do, people. We're going to sit back. We're going to weaponize the system. We're going to let the dog shit just keep on flowing because we can't stop it. The propaganda ministry with these numbers, this historic miss. I mean, think about it. The rocket scientists, economists out here, they believed we were going to add 422,000 jobs in December. We added 199,000. Now, if you were to look at how it's being spun, just open up, let's say, Market Watch. Just go to the Market Watch website. Headline, U.S. economy adds 199,000 jobs and the unemployment rate falls. They don't tell you right in that headline that we were expecting that number to be more than twice what just came out. No, you see, because you must be misled. You must be deceived on an epic scale. And that's what this is all about, people. That you and me, no. We can cut through it all because we know what's going on. And we will not deviate from what we are doing. All right, people, with that said, that's it for now. I will see all of you at the end of the day. And I just can't wait.